Good afternoon, everyone. Welcome to our Short Verticals webcast. We get together every week at this time on Thursdays to discuss different things about short verticals and how to successfully trade them. Now, I have a question for you, and the question, go ahead and answer this in the chat. Question is this: do you feel like you have a solid process to follow to help you trade short verticals? Meaning maybe you've outlined it in a trading plan, or you know that step one is going to be this, step two is going to be this. Well, we're going to go into more details about that today and helping you outline a process that we're going to follow in this class here as well. Now, I do hope you're following us coaches on X. I'm Connie Hill, CS. We have the pleasure of having Brent Moores in the chat today. Brent is a fellow coach and great friend. He is Brent Moores, CS, and we'll post educational content throughout the week, the trading day, things that we notice that we think you might find interesting. We'll go ahead and post about it. Okay, so do yourself a favor and follow along with us. Let's go through some disclosures and we'll lay out our agenda. Options carry a high level of risk and are not suitable for all investors. What we talk about today should be known as informational and educational. Don't consider it a recommendation. We will be using the Paper Money software application. It is for educational purposes only. Investing involves risk, including the loss of principal. Short options can be assigned at any time up to expiration. The deeper in the money the option is, doesn't matter. It can always be assigned early if the market does that. Now, that is something that's different in Paper Money than, say, a live trading account. Live trading account will assign you early. Paper does not. So don't get that false sense of security that, oh, it didn't happen in Paper Money, it's not going to happen in your live account. Past performance of any security or strategy does not guarantee future results or success. All right, I'm going to promote some of our upcoming workshops. Those of you that are here live, we like to let you know about that because they fill up really quickly. So kind of as a heads up to you, these are the ones that are coming up that are not full. We've had a couple of them fill up, so we're taking those down, and these are the next ones for you to focus on. All right, so Detroit, Denver, Anaheim. Who doesn't want to go to Anaheim at the end of May? Oh man, that would be lovely down there. All right, so if you can get there, do yourself a favor and you will enjoy it. All right, we always want to talk a little bit about what short verticals are. We have new people joining us all the time. You know, hopefully I would want you to have gone through the Getting Started with Options class and be exposed to short verticals. Doesn't mean you have to have mastered it by any means, but we'll always do a little bit of education of what short verticals are. We always want to have some discussion about managing trades. And then today, as I mentioned at the beginning and asking you if you have a process that you follow to help you trade short verticals, we're going to get into that today. And I'm going to look and see, we've got some no's, some yeses. Gary says, I have found more of mine have entered in the money than I am comfortable with. Yeah, that's good to recognize, isn't it? Very good. One question from the get-go here from High Speed is wanting to maybe look at a short put vertical that's in the money. Due to what we're seeing in the market, it might not really be that feasible to do something like that. It's not on my agenda. Okay, but maybe we could talk about it in the context of something bearish, although that's not kind of what you're trying to do, I don't think. All right. If you have issues with audio or video, go ahead and just refresh your browser. Sometimes that will happen to some of you. Okay, so give that a try. All right, so just kind of what is a short call vertical, because that's all we trade in this class. And so basically it's two contracts or two different types of contracts, a contract we sell and a contract that we buy on the same stock. They have the same expiration month. And the more expensive premium one is the one that we sell, and the one that's the lower premium one is the one that we buy as a hedge and as a protection that helps give us a credit that we bring into our account right at the moment that we sell that spread. It goes right into our account. And then we are going to let it play out. More likely than not, it might take a little bit of time for this trade to develop. And so you might be in the trade 10 days, 15 days, maybe even 20 days. Okay. It's not a swing trade where you're in and out in 2 or 3 days. Although if that happens to us, I don't feel bad about it. Man, I love it when it happens and you get to your target zone and can get out of it early. Now we're going to focus on the bearish side of things due to what we're seeing in the market. Now, I'm going to talk about potential candidates because that's going to be kind of like step one in our process, is developing a watch list that has stocks in it that we like, that we're willing to trade, that have enough open interest that we can be comfortable with it, versus having some things on the watch list that, we're really not going to trade. Okay, because maybe the volume's too low, maybe there's not a lot of open interest, even though the volume's decent. Okay, and so that's going to be part of our process here today. So for the bear side of things, we want things to be in a bearish or a neutral trend. We always want to have higher trading volumes with these stocks. So we're going to put a criteria in on that. And options with higher trading volumes, meaning open interest and volume activity, which is just for the given day, are things that we'll look at. And if we find things that have higher trading volumes and have a lot of open interest, generally we'll find that the bid-ask spread is tight or narrow, meaning there's not a lot of difference in between those two prices. It's a small distance, like 5 cents or 10 cents, maybe even in some stocks it might be like 20 cents, but it's less than 10% of the width. Okay. One last thing is setups. And we're going to be very picky about when we might decide to enter into a short call vertical. Okay. We're going to get in if this first bullet here, breaking down below support, and especially if it has higher volume, right? What does that mean? If it breaks down through support, well, it's likely to continue to drop, right? Until it gets to the next support level. Maybe it's run up to resistance and maybe it's starting to bounce down off resistance, or some people just like it at resistance when they sell it without waiting for somebody to say, hey, it's got to bounce down from there. And something that some of you are familiar with, a close below the low of the high day. Okay, those are going to be the 3 signals that we're really going to focus on. I am going to say there are other signals like breaking out of a price pattern, like breaking out of a flag or a triangle type formation. Those definitely are legitimate here as well. Now let's head over to Thinkorswim here. And let's see where the market ended up here today. Looks like they ended up down maybe 0.25%. Earlier in the day, it had been up. We can see this long shadow here. It had been up, but man, the bears kind of squished it down to the end of the day, right? The 10 exponential moving average is the blue line. It looks like the markets, and we'll see this with a lot of stocks as well, seem to be trending under that trend line. The red is a 30. And there may be some stocks that are running up maybe past 10, but bounce down off of 30. That can happen sometimes. All right. So that's why we're going to have our bearish hat on today. Let's go take a look at how the VIX settled here. And I'm going to kind of zoom in here. Kind of some of our higher areas have been at 28, 29, 27. Okay. When the volatility is higher, there's more put buying than call buying is what that's measuring. When there's more put buying, people are a little nervous or they want some protection. There's not as much put buying and there's more call buying, then typically that ratio, it drops down to lower numbers. And typically it means we're maybe in a more bullish environment than a bearish environment. Okay. Now I'm going to ask you, are we going to do some earnings trades today? Isaiah wants to know. I don't believe any of them do have earnings coming up. The examples that we're going to use here, you can obviously use this strategy over earnings. Some people do. Julie wants to know, can you buy one stock in the morning and sell the same stock in the same day? Julia, yes, you can. If we did a trade and we put it on and we noticed we put on the wrong strike prices or we did it the wrong direction. Yes, you can go ahead and put in a closing order. What you do need to be careful about is not exceeding day trades, which basically means if you're an account that's less than $25,000, you cannot have more than 3 day trades in a 5-day trading period. That's not a Schwab rule. That is a brokerage wide. It's a regulation that comes down from FINRA, which is what is a governing agency of brokers. And so that's what you just want to be careful of. Okay, if you've used up your day trades and you got into the trade and you're like, oh, I did it wrong, I want to close it. If you're out of day trades, you wouldn't be able to. Okay, so that's the caveat answer to your question. It's a yes, you can, but make sure you've got these circumstances. So hopefully that helps. All right. Somebody's telling you don't do it. Okay. Let's move on. Next, the stocks that we're going to feel comfortable using. What we're going to do today is we are going to build a watch list of stocks that we are going to continue to use for a period of time without updating the watch list. And we're going to go through, we're going to build this. I'm going to help you build it because we're going to build it here together. And then we're going to go back and use it all the time. Feel free to take lots of notes, okay, as we go through this process. And we're going to start out on the scan tab. Now, this is going to be a really easy search or an easy scan here. First of all, we're going to look for a stock that's trading at least $40. Why is that? And I'm just going to go off the last price. Sometimes it's easier to trade stocks that have a little bit higher value because of how the strike prices break out and percentage moves. If you're dealing with a stock that, say, is a lower dollar stock, it's a $10 stock or something, it may have options, but it might not be as friendly to work with. Okay, so that's why we're going to put in a minimum of $40. And you might have a different threshold. You might want 50 or 60, or maybe you're comfortable at 20. Okay, we're going to use 40. I especially like that for bearish stocks because I want there to be some room to drop. Okay, if the stock's already down at $10 and it has been dropping, can it drop much more? Right? We want to be able to have some room for that stock to drop. Now, we're going to use volume, but we're going to use average volume. And so I'm going to just click off that last one, and we're actually going to click off the second one, and we're going to add our own filter here with average volume. I'm going to click on stock. I'm going to click on study to get this criteria. We're going to come down to volume, and we're going to say average volume. The volume that was up there initially is just today's volume. We want to know on average. 50 days is going to be just fine, and we're going to be really picky. It comes in at 1 million. We're going to raise it to 2.5 million. And let me make sure I've got my enough commas or zeros on there, rather, I should say. So there's our 2.5 million. Okay, we're going to use that. Why 2.5? You can use a different number if you want, but basically we're looking for the liquidity. Okay, we're being picky. We're saying these are the ones we're going to love and use. All right, so 250. On this study, know that that will not work in your paper account. So you may have to build this on your live site and then share the watch list that you develop with your paper site to practice with. Okay. All right. So we've got some criteria there, but now we're going to do something that's going to do a ton of filtering. And that is we're going to intersect this criteria with the NASDAQ 100. Okay. So we're going to come down to public. And we're going to come down, it's going to be over here, NASDAQ 100. So we're saying start with 100 stocks, and now we're going to filter it. They've got to be at least $40, and they have to be trading 2.5 million shares. Okay, I'm going to hit scan. And it looks like it's bringing us, oh, let's see, I wanted more than 50. Let's go with 200. I want to get all 59 showing up there. So let's do that. We'll rescan it so that we have all of it. Now, what we're going to do, and I kind of already set it up this way, as I said, let's sort it by the volume. And the reason I'm going to say this is because there may be some with this criteria that maybe isn't great enough, doesn't have enough activity. So let's take a look at maybe first couple here. CSGP, we're going to come over to the trade tab on it. And let's go back here. Clicked on my little send to one. And there we go. All right. Now, it has some weeklies on it. That's nice to know. If we open up a weekly, we'll see, okay, maybe this, at least on the call side, there are some contracts here, but these are ones that expire tomorrow. Okay, so not really going to be that useful. We could come down here to the Aprils and we could see, hey, there's some decent numbers there. 1,700, 3,500, 3,600, that's not too bad. However, notice on this particular stock, it's in $5 increments. And generally, we're looking for maybe like a 20-something delta, a 30-something delta. Some people may go into the 40 delta. And so if you're not seeing strike prices represented there very well, you might decide to take it off your list, because maybe it's not going to be very often that it's going to provide you with what might be ideal for what you're looking for. Okay. As a result of the scan, there might be various ones here. Quite honestly, this is the only one that we're going to manually take off. Okay. So we're going to start our watch list with 59 stocks. We're going to click here. We're going to say save as a watch list. If we wanted it to be dynamic, we could save this little scan and run it time and time again. I'm just, for our purposes here, I want to use the exact same watch list that we create today over and over for a few weeks. Okay, so we are going to call this, I'm going to call it class SV for short verticals, and then I'm going to put today's date. So we're at 3/20/25, and we're going to go ahead and save this. Now, let's come over to the watch list area here, and we're going to bring up that watch list, and it's class SV 3/20/2025. Okay, that is our watch list, and I am going to sort it here by, let's do it by today. Oh, it was by volume, wasn't it? That let's see, we're going to get rid of this CSGP. That's the one we were looking at that just didn't have a ton. So I'm just going to space over it, get rid of it. Now it's not on the watch list anymore. Now we're going to do another step. This is going to be a little bit more involved. We are going to do a similar search, but instead of using the NASDAQ 100, we're going to use the S&P 100. So under our public S&P 100, we're going to do the same thing. It's got to be at least 40 bucks. It's got to trade at least 2.5 million. I'm going to go ahead and hit scan. It gave us about 79. Now, one thing you're going to notice is there are going to be some duplicates. Okay, if I sort this by, say, alphabetically, and we're kind of looking over here on this one, well, both of them have Apple. One of them has ABBV, one has Abbott. We don't get a duplicate again until we get to Adobe. Okay, which is fine. All right. We're going to add these to our watch list as well, but we're going to let the system get rid of the duplicates. We don't need two ticker symbols on there. And if you wanted to use two separate watch lists here, you certainly could. For our purposes, I want to join them together. So I want to walk through that process with you. All right. Let's see. Oh, Bob, thanks for the clarification there on the 3-day trading period. Brett might have given you some additional information there as well. Okay, so here's this watch list, and we are going to come up to the top here, up to this icon that's right below on demand. We're going to select on it. We're going to choose export, and we're going to say to a file. Okay, now I created a little spot here for in document exports to put our little scan in, and I'll just save this one over that one. That's the one that I did earlier. And we've got to have our Excel open, and I'll bring that over. Okay, this is what we just exported. Okay. And basically it just has today's date. There was the little watch list. The only thing we're going to use on this little sheet that we exported, we're just going to go and copy, highlight, I should say, so that we can copy just that first column with the ticker symbols. That's all we're doing. Okay, so Control-C puts it in our computer's short-term memory. Then we're going to come over here to our list we created, and we're going to say import. Trying to do these steps a little slow so you can follow along. And we're going to paste the symbols from the clipboard. Okay, that's what that Control-C did on the spreadsheet. So we're going to paste the symbols. Okay, you can see these here. Remember, Matt was on top, then Amgen, so forth. And right here it says, well, do you want to replace the symbols or just add to the current symbols? That's the one we're going to choose. We're going to have this add to this list that we started. Okay. And then it'll get rid of the duplicates for us. Okay, we're going to say, okay, that is the watch list that we're going to be using for a bit. Okay, so that's going to be something pretty solid in your process to say, what are the stocks I really will trade? Which ones are reasonable and I'm willing to trade them? If there's some stocks on here that you're not willing to trade, you're like, oh, open interest is a little low, volume's a little low, whatever it is, just take it off your list. Okay, don't keep it. Now, I'm not going to be able to share this list with you, which is why I wanted to take some time going through the actual steps, okay? But you should be able to, if you need to go back to the recording to follow all the steps, no problem. It's going to be there for you to do it, okay? So that you can build your own, example watch list for example trades. All right. After we get a watch list, what do we need to do? Well, we're going to look for setups. And setups are what we want the stock to look like before we get into the trade so that it looks like maybe it's a reasonable trade to do. Okay, what do we want the stock to look like? Well, do we want it already being, say, headed down for 5 days? Maybe not, unless maybe it's broken some support, just barely, and it's a new break. So we're going to identify what we want to look for here. Now, it looks to me, as I look in our chat here for a moment, looks like we have a survey out in the chat. And many of you know from time to time, we'll put a survey out there and we always appreciate your feedback. Anything you send in, we read. All right. And so I promise if you fill it out for me, I will read it, and our managers like to read the information as well. Now, you don't need to fill the survey out yet, but if you just click on the link while our session's active, you can let it kind of sit in the background when it's time to go or we close the class. If you would do me the favor of filling that out, that would give you bonus points with me today. How's that? Want bonus points with me? We do appreciate it. There's just 2 questions, radio button, plop, plop, whatever your filling is. And then there's 2 questions you can answer. I also say, if you want to send me some information, send me a specific question that you would like me to cover in a coming up webcast, use that space to tell me that as well, because I like to incorporate those things into our classes. Okay, so that's our small detour a little bit on the survey. Okay, back to the process. Okay, so I'm going to collapse the calculator for a minute, and I'm going to collapse our watch list for a minute because I want to use some space down here. And we're going to put in what are the setups that you like to see. Now, feel free to send that in to me as well, because if I don't mention maybe something that you look for, go ahead and chat it in. But kind of some of the things we've just talked about, we want a break of support. Okay, that would indicate the stock is newly dropping. So let's say break of support here. What else? It can just be at resistance. Some people like it at resistance, or some like it bouncing down from resistance. So I don't know if I didn't think I spelled that right. Resist, I-A-N-C-E, or I'm going to say bounce off resistance. Okay, break of support, bounce off resistance. It could also be bouncing off of a moving average that seems to be acting as resistance. So I'm just going to call it bounce down off an MA moving average. There could be some other things that we might look for, like we were talking about in the slides. There could be a breakout of a pattern. We'll bring in patterns quite a bit into our option classes because they can be really helpful and useful for identifying targets, for identifying exits, right? If something's in, say, a descending triangle and it breaks down outside of that support line of the triangle, well, it's likely to continue. It's never guaranteed, of course, but we can use things like that as well. So when I say break up support, it could also mean breaking out of that pattern, okay? So you have your idea what exactly you want to be looking for, okay? That is our setup. And as you review the stocks, you can quickly determine, does it meet this criteria or does it not meet that criteria, okay? So we're going to keep our mind open about the scratch pad. And actually, what I think I'd like to do is just kind of see if I can, I'm going to scroll down here so that you can see the break of support, the things we're looking for. Excuse the typo on the resistance there. All right. Next up, looking for the setups. Now, I kind of told you we're looking a little bit more bearish today versus bullish. This watch list that we're going to use for short verticals is going to have both bullish and bearish on it. If that bothers you and you want to break it out, feel free to do so, okay? But we will be using it for both purposes. And one thing you're going to find is that stocks will cycle, and you might be using them for a period of time as a bearish one, and then they rotate sectors or something changes in the market. Then you can still be using those same types of stocks for the other kind of trade that it didn't used to be, right? You could say, oh, our market's turned a little bit more bullish. Oh, okay, well, look at this. This stock's upward trending. We could easily use it in a bullish scenario. But today we're just going to focus on the bearish. Now, what I did earlier is I went through our watch list that I created, because I created this without you initially, okay? And I brought up my charts, and I just went through here, through the watch list, to see if I saw something that maybe had an entry signal. Let's look a little bit shorter term here. Let's maybe go 6 months. And I want you to notice down here we have the volume, because sometimes if we're seeing something break support, it's nice if it's on extra volume, and we can see down here, this pink line is average volume. So if it goes above it, then we know we have some extra volume. Next up, let's see. Looking at the chat here, somebody said when I clicked on the link your video stopped. It should just, I think you're talking about the link from the survey, and it should just pop it in a separate window, okay? That's what it should do for you. If it doesn't do that, maybe copy the link and put it in a new tab, okay, and bring it up that way. Brent's also saying maybe possibly refresh as well, okay? All right, so we've got our list we're going to work with. We've got our setups that we're looking for. Now let's go find it. Instead of dragging you through all the thoughts, I'm just going to do a little bit, okay? ACN, well, it's definitely downward trending. I've got this ADX on here. ADX tells us the strength of the trend. Whether it's bullish or bearish, it doesn't matter. Anything above 25 means strong trend. We can see today, this stock, looks like they had some earnings. You can see it stayed below that 10-day moving average. It looked like it was just going to bounce there, but news came out and basically the news dropped it, okay? As I looked at it, it's kind of close to a support area, so we're going to go, okay, we're going to skip on that. Go to the next one. Oh, look at that. It did drop down, but it's sitting right at support. Would be more ideal if it were sitting at resistance than support. Now, not a big deal. We just go to the next stock. And, you'll be able to, when you've got your signals figured out, your setups figured out, you can go through fairly quickly to see when you have a signal, when you don't. Okay. Some of these I already had lines on because we've used them before for other examples. But some of them you might need to draw in your support and resistance and see, what's going on there. First one we're going to start with, hopefully this is still a good one for us. Oh, good, it is. CTSH. Had been upward trending, so it would have been more appropriate to do bullish trades here. But what's happened since then? Yeah, the 10-day and the 30-day are both headed down. Looks like the 10-day may be acting as resistance on the stock now. Came right up to it, and today it not only bounced down, but it broke through the $78-ish level of support. So the break is very recent. Okay, so this is going to be our first example trade. Let's go put it together. And let me just ask you, is going through this process, is this helping you kind of piece together the strategy and how you can make it work for you, and helping you build a process that you can follow? I hope the answer is yes. We're going to continue to repeat this pattern, all right, in our classes when we meet each week. We're going to use the April 17 options. Many traders like to use between 20 to 40, sometimes have to go to 50 days worth of time. Tends to be a sweet spot where we can get a decent enough premium, but we also can get a higher probability trade. Okay, so today looks like we've got a 31 delta here, which some people like to trade in a 30s delta or a 20s delta. Sometimes some people might go to a 40s delta. 30's kind of in the middle of that sweet spot as well. So we're going to trade the 80-8250. And lots of contracts here, right? You don't feel like you're the lone goldfish in the bowl, right? There are lots of contracts out there. So let's go ahead. Let's just say sell. Sell on a vertical. All right. And that's pretty close actually to the premium I was seeing earlier today. I'm going to go ahead and lock it. Okay, so we can work with a firm number. And so next, we've already decided that it meets our technical criteria. We've already decided it meets our fundamental criteria when we did the scan and created the watch list. So now it's just a matter of, let's put the trade in. All right, let's see if it gives us a good enough return. Okay, so I'm going to say, after you identify the signal from your setup and it meets the setup criteria, all right, then I'm going to say determine if the percent return on investment is good enough for you. Okay, you'll probably have to do some paper trading with verticals to know what that number might be for you, right? It's not like you learn the strategy and go, oh, I am really comfortable with having a return of 45%. Or 25%, okay? A range, a lot of traders like to look for, is a 30-something% return. Sometimes if we have higher volatility stocks, we might get a better return than that. Sometimes if there's lower volatility stocks, it might be a little bit lower than that. And so you want to make sure, is it good enough for you? So let's just go through the calculation here real quick. We're going to take 250 minus our current credit. Let me unlock and just see if it gets any better. Ow, it got a little worse. That's okay. We'll still deal with it. And then we're going to subtract our 55 cents, which is our max theoretical gain. All right. What does that do for us? That's actually, I must have had an old number in there. Let's try this again. 2.5 minus 0.55 gives us a $1.95. So $1.95 is our theoretical max loss. 55 is our theoretical max gain. When we have this spread, the one we're selling, the 80 strike, is the one that we have a potential obligation on. Okay, so when we're talking about options being short or short options being in the money, this is kind of the one we are focusing on because we would love for it to be out of the money by options expiration or during the course of the trade. So if you want to add the technical component to it, let's actually finish our percent return here. So 55 divided by 1.95 gives us about a 28% return. And that is actually a little bit lower than where it was earlier, but we're going to go ahead and we're going to say we're going to keep it. Some people will say, if I get enough percentage gain that's theoretical that they're shooting for. And it is similar to the number of days left in the trade. They might be satisfied with it. They might go, oh, 28%, and there's 28 days, that's about 1% a day. Some people might be satisfied with that. Some people might use an absolute number. They may say, nope, always has to be 30% or 35%. Okay, you will develop that as you work your own paper trades to develop where your comfort range is. All right, so we've got that. Let's do a first trigger sequential here because we're going to set up our exit order in advance. If we can risk about $2, right? It was $1.95, and in our scratch pad, we let ourselves risk in this account up to $1,500 per trade. We don't have to go to $1,500, but we can. So we're going to take our $1,500, and I'm just going to divide that by 195, right? That's our max theoretical loss. It says, okay, you can do 7 contracts. Okay, so we're going to do 7. And then we're going to put in our buyback order. All right, so we're going to say create opposite order. And when we get a chunk of this 55, we're not going to treat it like I treat toothpaste, where I want every little last thing out of it, but we're going to say when we get the majority, let's get out. Okay, so 55 times, we're going to say 70%. If we've got 70%, only 30% is left. So that says go buy it back at 16 cents. So we're going to put it in at 16 cents. We're going to make it good till canceled, and we're going to send it over to our bearish bucket. All right, we've spent a little bit more time here today focusing on the process. Next week, we're not going to focus as much on that beginning part of the process. We're going to be focusing more on the end part of the process. I always want to show you some trade management in our discussion. Before I do that, I do want to make sure you know how to go find the archives, all right, of this class or any other class. On the bottom right of your screen, there's a little subscribe button. It's a YouTube icon. It's blue. And if you see it, you can click on it once, and you only need to do it once, and it'll subscribe you to our Trader Talks channel. And that makes it so much easier for you to be able to find our content. So let me go out here to my window. Where did it go? Let's try this. There we go. And here is our Trader Talks Schwab Coaching Webcast channel. Okay. And so after you subscribe, you can come in here and you see what's going on. I brought this up when Trading the Trend was still going. So that's the class that's showing. But it'll show you what's coming up next, because it's going to be getting started with stock investing when I'm finished here today. Mike Fairborn's going to be leading that discussion. There we go. Getting started with stock investing. But then you can go and you can find whatever playlist that you might be looking for. You can find your short verticals playlist. And then you can go back and see, like, what did things look like when we placed previous trades, especially if you're trading along with me in your paper account, which I'm going to encourage you to do. Okay. But just know, if you subscribe, it allows you to just find our content really pretty quickly. All right. Let's head on back. I wanted to do a little bit of trade management with you. So back we go. And we had a trade that we put on. We're just going to pull the chart here. GILD. This was a couple of weeks ago. I believe, Brent, you might have taught this class for me last week. And thank you very much for doing so. Appreciate it. We put on Gilead here on this green oval day. This is the candle we got in. We were seeing it do what? Break out of this flag. Well, what did it do? It went up for a few days, kind of meandered around. And we did the same thing that we just did on that trade. We put in an exit order. So if we got 70% of our max gain, take our money, let's get out of the trade. Okay, it's like, got the big chunk. We're not going to be greedy for every penny, but get a big chunk. And so it executed the trade for us. I didn't have to go out and do anything because it was already sitting out there. And as it popped up here that day, it got us out of the trade at what we were looking for. All right. Suppose we didn't have that order in. What do you think might be our situation right now? This was due to expire on March 21st, which is tomorrow. It's below the short strike price at this point. It wasn't up here earlier, but now it's below, it's in the money, which is where we don't want to necessarily write it to. Okay, we want to get out when we're running out of time, and if we get a big chunk of it, that's best. If we need to take a little bit of a loss, sometimes we will do that as well. Okay, but suppose we hadn't put an order in there and we forgot about it, and we finally look at it today, you're going to be like, oh, rats, I don't like where that is. Oh, dang, it's in the money. Okay, that just kind of shows you how useful it is to have that exit order in place and do it when you're getting into the trade. Let me answer some questions out here. Tech says, hey, could you do it with puts? For a bullish, the bullish one is going to be short put verticals. This one was a short call vertical, but actually on that watch list that we created that we're going to use, we are going to be looking for both bullish and bearish. In addition, we're going to, when we have our class, we're going to go back, look through the list, see what's available. But if I see something on the list during the week and it has our setup that we want, right? Break a support, a bounce down, break out of a bearish price pattern, I'm going to go ahead and enter the trade. I'm not going to have every trade be done in our class because I think we'll miss a lot of opportunities that we could use as teaching opportunities. Okay. So that's kind of how we're going to structure this going forward. Now, let me just remind you that there was a survey placed out in the chat area. I think Brent reposted that. He may even have it pinned to the top. I can't see that high. But if he does, go ahead and click on that link there. And again, we really appreciate it when you take just a minute to fill that out. If you just do the 2 radio buttons, then it's about a second. Okay. And we do value your feedback. And again, use that space in answering the questions. If you want to communicate something to me like, hey, I'm struggling with this, or I would like to see something like that. What was chatted in here earlier about doing something deep with the puts, that would be an ideal thing to put in there. Although I will take a note on that. When we do bullish, we'll certainly touch on that that concern, that question that you have specifically on that. Today just didn't work into our agenda based on what we had planned. All right. So we've encouraged you to subscribe. We've encouraged you to fill out the survey. And Brent and I would love to have you give us a follow on X. All right. Now for you, what would I want you to say work on through until we meet together again here? Well, I would want you to maybe work on this process. Maybe go build your own watch list. Maybe it's similar to what we did here today. Maybe you have some other ideas. You're like, I kind of want it to be this way. But get your watch list going and make sure that it's liquid. Make sure it has options you would be willing to trade. Okay. And that it's not too low of open interest as you pull those up. Okay. This is going to be your bread and butter. It's what we're going to go through the process here for several weeks as we break down. This is how you trade the short verticals. All right. So that's what I would encourage you to do. Now, Brent, I appreciate you being here today and helping answer questions. We appreciate all your helpful hints, helping people out with their questions. Now, I'm out of my time, but coming up next is going to be, like I showed you, getting started with stock investing. If you're ready for something maybe a little bit more basic, if this was a little too much for you, that is a fantastic class for you to go to. Now, the next time I'll be back will be tomorrow. I'll be teaching Barb's class, Trading a Smaller Account. So that'll be tomorrow at noon Eastern time. Love to see you there. Have a good afternoon, everyone. Bye-bye.